3 signs of bad management and how to avoid them. If you are an entrepreneur, if you have or if you own a service-based company, if you have an S corporation, then this video is for you. Hi, my name is Carla Carderera. I am one of the managing partners at Upfront CPA, and today I'm going to speak to you about 3 signs that maybe there is some bad management in your company. Revenue might not be missing. You might not have a problem in revenue. Maybe the money is coming in, maybe your revenue is high, but if you don't know or if you don't understand your numbers, then that's a sign of bad management. So as I said, I'm going to give you 3 most common bad management mistakes and how to fix them. Number 1, you only look at your numbers at tax time. What happens if you are unsure about your numbers or your financial statements? Let me ask you that question. Do you look at your financial statements on a monthly basis after your bookkeeper or your accountant is done with them? Do you actually go through like a monthly close process and then actually sit down with your finance person, whomever works in your accounting? Do you actually sit with that person, go over the numbers, and are you understanding what those numbers are actually saying? This, as a business owner, this is extremely important because you are going to make decisions based on those numbers. You need to understand what they mean. You need to understand how they translate into decision making for your company. That is definitely something that we see a lot in our firm, is that the business owners, maybe they are obviously they are experts at what they do or what they sell, but not necessarily understanding what their financials are telling them. And this is very important. And you don't have to know accounting 101 in order to be able to interpret the numbers and what your financial statements are saying. Therefore, you need monthly financial visibility and quarterly tax planning. You have to meet with your tax advisor or with your CPA at least on a quarterly basis, because in order to make decisions, 1, you have to understand your number, but also you need to put, if you are a company that is making money, that has net income, there are strategies that you can implement throughout the year to help you keep some of that net income with you instead of paying it in taxes to the IRS. But all of that is not magic. That takes planning, that takes time, and that's a meeting that you have to have with your advisor, as I said, at least on a quarterly basis, and the strategies have to be implemented. And believe me, you are going to see the results at the end of the year. Sign number 2. You don't know where your money is going. Revenue is coming in, but decisions are based on guesses. So how do you fix that? You need structured financials that tells a story, where to cut, where to invest, and how to reduce your taxes. Again, the only way that you are going to know this information is by actually having financial statements done correctly, done on a monthly basis. Your accounts have to be reconciled. You have to make sure that you understand what the numbers in the balance sheet are and what the numbers in the profit and loss are. If you are not sure, you have to sit with a professional so that they can help you understand the numbers. Also, you need to make sure that you do projections throughout the year, because there are some businesses that are seasonal, that maybe at the beginning of the year is your slow season, and then maybe in the summer, that's when actually it's your high season and your net income starts increasing. So you need to understand how the numbers go and flow in your business throughout the year. Again, because tax planning, it's done between January and December, and it needs to be done before you actually close the year and sit down with your CPA or your tax preparer to prepare your taxes. There are plenty of strategies that can be done that are legal, and it's money that is actually going to stay in your pocket, or it's money that you're going to be able to invest in other things, maybe grow your business, but it's money that you can put it in good use instead of actually paying it in taxes for not doing the planning throughout the year. We see that a lot with our clients, and believe me, at the end of the year, you are going to see results if you have these planning meetings. I would say my recommendation is definitely to be done at the end of every quarter, but at least the minimum to have it done twice a year, maybe in June and maybe in November. But yes, please sit with your tax professional to work on strategies. And these are for businesses, obviously, that have a high net income, and they have to lower that in order to be able to save some money in taxes. Number 3, taxes are always a surprise. They shouldn't be. You should know you should have at least an estimate about how much you're going to owe in taxes at the end of the year. Because believe me, if you look at those numbers, you can project through the end of the year, you are going to know approximately how much your net income is going to be at the end of the year. And obviously, there's some calculation depending on the tax entity of your company, how that translates into your personal tax returns. That's a different story. But again, your tax advisor they will know both sides of your personal and your business, and they can combine everything and be able to implement some strategies throughout the year. So if you say, I wasn't expecting to owe this much, that means that you don't have a strategy. So did that happen to you this year? At the end of the year, once you completed your financial statements and gave the reports to your tax preparer, were you surprised when you saw what your tax liability was at the end of the year? If you were, that means that you had no strategy and no plan throughout the year. So my recommendation is have financial statements prepared at least on a monthly basis, accounts reconciled, understand the numbers in the balance sheet and your profit and loss. You have to have projections throughout the year. It could be based on prior years. It depends on the business, but it could be based in many different items. But if you work with a professional, they will help you, and based on experience, they will help you make those projections, as I said, based on your history, based on the different items, based on your business. That's why it's important that you work with a professional, with somebody that has experience and has been trained to help you translate those numbers into strategies that are going to be able to help you to keep some of that money in your pocket or put it in good use. Call Upfront CPA. That's exactly what we do. These are exactly the strategies that we provide to our clients. Don't be afraid to look at your numbers on a monthly basis. Numbers tell a story, and you need to understand what that story is telling you. And believe me, when it's time to make a business decision, you're going to be much more comfortable once you know what those numbers mean and what your projections are throughout the year. Tax time should not be a surprise to you. You should be ready to file your taxes, and you should be ready to expect what the tax liability is going to be at the end of the year. So as I said, contact your tax professional. Make sure that you meet with them regularly. Make sure that your financial statements are up to date and that are being done correctly. Upfront CPA, my name is Carla Calderera, and I am here to help.